Hello, guys, and welcome to the show. Glad to have you guys here on this Tuesday, December 18th, 2018. And, you know, I think that the silver guys out there, the silver bugs out there, are more of them than the Bitcoin guys. So I'm going to do the silver report first this morning. Let's get started, and let's open up the charts right here. And let's get right into the silver price today. Let's bring it up and take a look. The green line, is today. It's dropped off. It's dropped off a little bit. It's back down into the range where it's been for the longest time. It's been running in around 1450, more or less, And I think that this is pretty much bottom myself. That's just my opinion on it, but I think that that sooner or later we're going to get a big breakout in silver. But man, you got to be patient with this metal and with gold too. Let's take a look at gold this morning and see what it's doing. Gold is at 1246. Now gold is up 90 cents, where silver's actually down a little bit. The gold to silver ratio is really skewed. It's something like 80 to 1. I mean, it shouldn't be. It should be more like probably 15, 20 to 1 instead of the 80, around 80 to 1. And it's going to go back because it's coming out of the ground at 9 to 1. 9 ounces of silver for every 1 ounce of gold. And so it should be selling at exactly 9 to 1. Okay, so now let's take a look at Bitcoin today. Expand the chart out, 35.54.74. We've had an upward trend on Bitcoin a little bit. Last week I was saying I thought the Bitcoin market was a little bit oversold. But that's the way markets work. When they go into a bubble, they go higher than they should, and when they go down and they crash like that, oftentimes they overshoot a little bit. So it might not be done overshooting. It could actually become even more oversold before it finally turns back up again. But I mean, how many people out there actually do you believe Bitcoin's really going to go to zero and you're going to get free Bitcoins? I mean, a raise of hands. How many people actually believe that? Because that's just a silly notion. Bitcoin is going to go down until it finds a bottom. Nobody out there, including me, knows how low it's going to go when it finds that bottom. But then there's no place left to go after it's finally bottomed than up. It has to go up. And it's the old saying, what goes down has to go up, and what goes up has to come down. It's seriously. Let's take a look now at cryptocurrency market capitalizations, and we see we're up to 115 billion. I mean, we made $5 billion overnight, roughly, in market capitalizations. And we're looking at 54.2% Bitcoin dominance. And some of these coins have really went up. XRP really took off. It's up to 33 cents right now. Let me see a few others that really took off. We got a 21% hike rate in 21.81% on EOS. Now, can you imagine that? If you just bought it yesterday, you could have made 21% on your money. $2.62 on EOS. So we got some good hikes, and even Ethereum's went up 6%. I say even Ethereum. Okay, now let's take a look at the Dow Jones Industrial Average this morning. She's up 284 points on the day. That's a little bounce back. And the reason for this is the traders have been conditioned now at this point, and the conditioning comes from, let me go back on the range here on this and go back to, say, a 2-year chart. No, let's go 5 years. We go back to a 5-year chart. What do we see? We see this market just steadily going up and 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 up. And it's up near the heights of the peak of where it was right now, to tell you the truth, but just up and up and up. And how these traders actually get conditioned is they're used to buying on the dip, and then the market goes higher than ever did before, and they make lots of money. And you see these these traders, they're still in that mode. They're still like, some of them are out there and they're telling people, start trading. Oh, you're going to make all kinds of money, because they're used to buying on the dip, and then the stock market goes up higher than ever before. And they had that repeated pattern actually for years. For years. Look, this goes all the way back to 2014 right here on this chart, and they were conditioned through 2014, 15, 16, 17, 18. All those years they were conditioned on making lots of money in the stock market because it always goes up. Ain't so anymore. It changed. It's changed right on this peak right here. It changed on the 9th month of 2018. That's not long ago. So they haven't really had a chance to recondition to a market where you don't buy on the dip. Now you sell on the rally. And they haven't conditioned themselves to that yet. They're continually hoping for this market's going to go way higher again. They got these hopes. And so they're still buying on the dip. And so that's what we're seeing happening this morning. We're seeing a 300-point rise because they think, hey, you know what? We've just had a massive fall in the market. Oh, boy, she's going to really go up now. And they make it happen. They make it happen because there's so many of them that they see that they actually make their dream come true. They all start buying on the dip, and it starts to go up. No, duh, it's going to. That's what it's going to do if they all start buying on the dip. But the thing is they should be selling on the rally now at this point, because that 300-point raise, it just ain't cutting it. If you can see what the market's actually doing here, ever since this peak it made back on the 9th month of this year, it's been a slow descent downwards, and it's gaining speed, the descent downwards. We're in market's turned bearish. It turned bearish right at that point. That's when it turned bearish. Okay, let's take a look now at oil. Oil is really bearish. Look, she's under 50 bucks. This is going to have a profound effect, because oil is the underpinning of the markets. It's actually like, okay, so now let's move on to bonds and rates. I don't want to get too bogged down this morning and talk for 30 minutes or anything like that. We're going to get on to bonds and rates here. And what we're looking at is all of these bonds, there's been massive selling. Not selling, I mean buying. There's been massive buying into the bonds quite recently. And they've been moving out of equities, and they've been moving out of the stock market, and they've been moving into these bonds. And what we see here is we see it actually has dropped. But they haven't dropped substantially. If you notice the U.S. 10-year, right? I was predicting it was going to go higher than 3.25%. And yes, it would have if there hadn't have been so much bond buying. But they haven't dropped it that much. Between 2.85 and 3.25 is not that big. It's like, what is it, 40 basis points. It's not even 1%. It's 40 basis points. And if we take a look, there's an article here. Well, first let's do the U.S. dollar index, 96.97. So the dollar is slipped just a little bit today. But ever since this morning, she's starting to make her way back up again. She's creeping back up to 97. And it's probably going to complete the day above 97. Now, let's take a look back on the bond buying thing. If we take a look here at Zero Hedge, they got a story running here. It says, Wall Street turns apocalyptic. We just had the biggest ever rotation into bonds. It says, so much has changed in the last year. It says, in this time in December 2017, investors were super bullish and long on Bitcoin, which hit $19,611. And short on bonds. Okay? Now they've went long on bonds because they're scared. Basically what it amounts to is they're all scared. And they think that U.S. Treasury bonds are the safest place for an investor to put his money right now. And they've been really bullish on bonds. And they've been actually countering what the Fed's doing. The Fed's selling their toxic balance sheet, and they're like, who's going to buy the bonds? And before this started, we were like saying, who's going to buy all these bonds? That the Fed, the they're going to come flooding in, and the bond price is going to crash. Well, that's exactly the opposite happened. They did flood in. They've bought all the bonds. But, you know, this is not going to last. This is not going to last. This is why I'm predicting personally that the bond price is going to start to creep back up again. It's going to start to heat back up because they can't keep buying these bonds forever, and the Fed is sucking in. They're tightening the belt. They're sucking in $50 billion a month of liquidity from the market in a project called quantitative tightening. They're very defensive over that project. They will stop their interest rate hikes first before they stop. They just got to keep that going with that quantitative tightening. They don't want to stop that project. Okay, they're defending it. Let's take a look at the 3-month LIBOR right now. And you know what we see here? We see the 3-month LIBOR rate. Okay, this is this year's chart from the 12th, 18th, 2017 up to 12th, 17th, 2018. So it's about a 1-year chart. And we see the LIBOR was way down around 1.6%, you know, a year ago. And now look at it, 2.8%. I mean, it's just been a steady increase. Of course, through the summer months, you know, it had a little spot where it just kind of went along, you know, and it didn't kind of go up very much. Once it hit about 2.3% or so, it just went along. But now she's on the increase again. She's on the rise, and she's rising daily, and she's at she just touched 2.8% on the U.S. LIBOR. Now, you're taking a look at kind of the equivalency of that is the U.S. 10-year Treasury. It kind of equals out with the LIBOR. Well, actually, the U.S. Treasury should be higher than the 3-month LIBOR. But the LIBOR is catching, and it looks like it's going to pass the U.S. Treasury. This, to me, in my mind, is a bigger inversion than the inversion in the yield curve. This is a bigger inversion than this is big. To me, this is really big, because if the LIBOR passes the 10 U.S. Treasury 10-year, you have all these derivatives products that are based on the 3-month LIBOR. You know what I mean? and this is just something that's completely out of whack within the financial system. But it shows you that there's something big time wrong right now. There's something hugely wrong. And when there's something hugely wrong, generally when the corrections manifest themselves, you see something big happen within the financial system. Listen, thank you guys for listening. Like and subscribe. And we will catch you in the next show. Bye-bye, guys.